Going on? It's Darth Dividend. So I looked at my video that I did with REITs, and honestly, I could probably condense it into a shorts. So I'm going to jump to my next video. What's going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have some discount dividend stocks that are a deal right now. They have solid dividend growth. I own them. I'm going to be long in them. I got actually a new one that I believe is at a discount, and they just acquired Discover Financial Services. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out these discount dividend stocks right now. The first one I want to go over is PepsiCo. It's sitting at 131.51. Now, PepsiCo, I own them. They are a deal right now. At one point, they were doing extremely well against the S&P 500, and they're in the blue if you look at this graph. The S&P 500 is doing extremely well. Its dividend yield right now is 4.12%. That is a deal right now with the high dividend yield. The PE ratio is 19.33. The average volume is 4.82 million. The market cap is 179.61 billion US dollars. Your range is 130.16, and look at this, 183.89. That's its year range. So it's down significantly from $183.39 to $130.16. Day range is 130.27 to 131.51. Its previous close is 130.74. That is a deal. I'm going to show you some more information about Pepsi. Now, again, annually, their revenue has done well and it's been consistent. So 2024, its revenue was up 0.42%. That's 91.85 billion. The operating expense is 36.04 billion. That was up 0.88%. The net income is at 9.58 billion. That's up 5.55%. The net profit margin is up. It's 5.14%. The earnings per share is up 7.09%. EBITDA is up 3.22%. So it has gone up significantly year over year. So that's one thing. And again, they are down. The recent earnings report have people a little nervous, but annually they have done extremely well. And I can tell you, I use a lot of their products daily, which includes Quaker Oats. Don't forget they own Gatorade. That's a big company, and they are always acquiring companies. Frito-Lay, they own Frito-Lay as well. So again, with the recent things with RFK Jr. and these dyes and everything, they are starting to adapt because great companies like PepsiCo adapt. And let's jump to their dividend history. So looking at PepsiCo right now, 2015, it was 70 cents, the quarterly distribution. 2016, 75% to 81 cents. I'm sorry, 75 cents to 81 cents. 2018, 93 cents. 2019, 96 cents. 2020, 102. 2021, 108. 2022, 115. 2023, 127. And 2024 and 2025, 136. So yes, its payout ratio is a little bit high right now. The number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 7.24%, but it's such a deal, I can't say no to it. If you bought one share, you made $5.42 with a 4.15% dividend yield. I can confirm I have been buying Pepsi for the past few years. I'm going to continue to buy shares of Pepsi. Hopefully my dividends buy shares of Pepsi from my high yielders, because the strategy is hopefully going to be set by the end of May, and I'm going to reveal to you my strategy. The other thing with PepsiCo is, again, it's better than Coca-Cola. It's bigger than Coca-Cola. But I have another dividend stock that I believe is a deal, and I just started buying them. This one I believe is still at a deal, and I still think it's a discount dividend stock. It's Capital One Financial Corp sitting at 188.14. I am extremely impressed with their customer service. I had a situation with people fraudulently using my cards. They handled it. They did I got reimbursed 100%, and they did a fantastic job. So I have to give credit. I have a lot of confidence in them. Unlike KeyCorp, who I dropped, which was one of my other banks that some things were going down, Capital One did a fantastic job. Its dividend yield is 1.28%. Its PE ratio is 15.78. The average volume is 5.32 million. The market cap is 71.89 billion US dollars. Its year range is 128.23 to 210.67. Its day range is 186.60 to 189.11. Its previous close is 185.71. In the past 5 years, also, it has destroyed the S&P 500 202.47% to 92.17%. So they have done extremely well financially, and they are destroying the S&P 500. That is very attractive to me. This is definitely IRA material, and do not forget this. Capital One's acquisition of Discover Financial Services is set to close on May 18th, 2025. After receiving all necessary regulatory approvals, the deal, which is valued at $35.3 billion, combines two digital banks, creating a sixth largest U.S. bank by customer deposits. The merger aims to increase competition in payment networks, offer a wide range of products, and enhance innovation and security, according to Capital One. This is on Google. Thank you, AI, for revealing to that. It sums things up a lot easier. So a lot of you guys need to take advantage of AI when it comes to researching stocks and dividend stocks and news on many stocks that you own or have interest in as stocks to watch. Now, let's look at the dividend history of Capital One Financial Corp, or COF stock. So I'm going to show you the significant increase that happened recently in 2021. It was 40 cents. And then you got, it appears to be a special dividend at 120. And then 2021, 60 cents. 2022. And right now I'm anticipating a dividend hike with them. The dividend growth in 5 years is 25.22%. Has a payout ratio of 16%, so it can offer a wide variety of potentially dividend hikes. Again, it just did this acquisition, but there's a lot of potential with dividend growth. The number of dividend increases in the last 5 years is 2. If you bought one share, you made $2.40 with a 1.29% dividend yield. But again, that payout ratio, the dividend payout ratio is important. Payout ratio is important. So it can still grow and still distribute dividend hikes, which is very important with COF. So this one I see is very important. I had to capitalize on them and go in and buy them. Let's jump to the next dividend stock. And this one really surprised me as well, but I own them and I really like them. Remember, you have to do K1s with them, Enterprise Product Partners, and you can correct me if I'm wrong. Sitting at 30.25 in the past 5 years, it is starting to keep up with or beat the S&P 500, which is quite impressive. In the past 5 years, its growth 90.17%, the S&P is 93.45%. The average volume is 6.30 million. The market cap is 65.49 billion US dollars. Year range is 27.37 to 34.63. Its day range is 29.90 to 30.29. Previous close is 29.96. So let's look at the dividend growth of Enterprise Product Partners. So the dividend growth isn't too fast, but again, it's a high yield dividend stock, one of the best high yield dividend stocks to buy. Again, it's an MLP, and again, you can correct me if I'm wrong. I pretty much know because I pay taxes and I have to deal with K1s, but if I'm wrong, you can correct me on here. 2015 quarterly, 37 cents to 38 cents, 2016, 39 cents, 2017, 41 cents, 2018, 43 cents, 2019, 44 cents, 2020, 45 cents, 2022, 47 cents, then 2023, 49 cents. And then you got for 2023, 50 cents, then 52 cents, then 53 cents, and then 54 for 2025. Yes, you're going to get a high payout ratio. Remember, free cash flow is the big indicator. And again, correct me if I'm wrong, I'll say that a million times. The number of dividend increases in the last 5 years is 8. Dividend growth in 5 years, 4.34%. So if you bought one share, you made $2.14 with a 7.15% dividend yield. That is a really good high yielder that I like and I enjoy buying. I'm going to jump to one more. I'm going to have to go with Johnson & Johnson, sitting at 157.87, a dividend yield of 3.30%. PE ratio of 17.54. The average volume is 10.13 million. Market cap is 378.72 billion US dollars. Its year range is 140.68 to 169.99. Day range is 154.50 to 157.88. Its previous close is 154.42. Now, again, it's not doing too well against the S&P. So, what makes Johnson & Johnson a really good dividend growth stock? So not only are they a big company, but dividend growth is very important. So we're going to look at its dividend growth history. I'll start in 2013, 61 cents to 66 cents, 2014, 70 cents, 2015, 75 cents, 2016, 80 cents, 2017, 84 cents, 2018, 90 cents to 95 cents, 2020, 95 cents to 101, 2021, 106, 2022, 113, 2023, 119, 2024, 124, and 2025, 130. Again, its payout ratio is 49%. The number of dividend increases in the last 5 years is 6. Dividend growth in 5 years, it's 5.19%. If you bought one share, you made $4.96 with a 3.21% dividend yield. So I own all 4 dividend stocks. I really like the dividend growth. And again, dividend growth always wins in the long run. So you have to realize that 10, 15 years, these yieldmax ETFs, going to happen with them when the dividend growth wins with a lot of these dividend growth stocks. That's why I use the income with some of these options income ETFs to buy dividend growth stocks because it's going to win. Market goes bad, that's fine. The price goes down, Johnson & Johnson, but the dividends keep on flowing. And the consistency with the dividend growth is important. That's why dividend growth investing always wins. That's why I'm funding these high yield dividend stocks and these income stock or income ETFs or dividend ETFs or options income ETFs, however you want to say it, to my dividend portfolio because I want to buy stocks like these that are at a good deal, give good dividend growth, and give me raises all the time. If you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to try to squeeze in a video for you tomorrow. We'll see what happens. Take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money, so be aware and do your due diligence. Go to a financial advisor for financial advice. Go to a tax advisor for tax advice. Telling you straight up, this is entertainment purposes only. You have to be aware, do your research, do your buying. It's just very simple. Simple tasks to do. You don't have to buy things because I buy things. Just being straightforward. So take care and have a good one.